failure to notify the underwriter at a later date could factor into a prejudicial decision down the road.
The Weekly Friedman, your source for the most essential information in the default industry. With your host, Adam Friedman.
Welcome back to the Weekly Friedman, your source for the most essential information in the default industry. Today, I'm joined by Friedman Vartolo Senior Associate Anthony Ortiz, who's been a reoccurring guest on the show. And today we're going to be doing a deep dive into title claims. What are they? What are some common responses? And why are they important? Anthony, how's it going?
Great, Adam. Thanks for having me back.
Thanks for coming back. You spent a lot of time doing title work, and I think it's kind of one of those areas in default services where maybe it doesn't get the biggest headlines, but it's vital, right? Like if you can't get clear title to something, what are we doing, right? So let's jump right in. For those in our audience that don't know what a title claim is, what is it?
So before I go into a title claim, I think it's important to understand the basis for one. So at origination, a lender will obtain what's called a lender's policy. And this is insurance that protects the lender's mortgage in the property against potential title issues or defects that could arise after the loan's funded. So you have certain what's called covered risks. And this could be something like unmarketable title, unpaid tax liens, defects in the title. So that could mean prior unreleased mortgages, a lack of a legal description, title being vested in someone other than what's stated on the policy. So these are just some flavors of defects that could affect a lender's priority in a given property.
What if the property is damaged? Would this type of a policy help the lender or the person receiving the policy?
So it would depend on the terms of the policy, but traditionally, no. Those are something more covered under like a homeowner's insurance where the lender could be named a beneficiary under that policy or another type of insurance. But in terms of the type of policies we're talking about today, no, they actually don't even insure the terms of the mortgage. Simply, it just protects the mortgage as a lien against the property and it guards it against any title issues.
Okay, and you mentioned there's a lender's policy. You want to walk us through the difference between a lender's policy and the owner's policy?
Sure. So a lender's policy protects the lender's mortgage interest in the property. An owner's policy protects the fee interest ownership of that homeowner. So if there's any competing ownership claims, a homeowner can also rely on that policy to protect them.
In what scenario is somebody like sending a title claim letter? Because if you have a policy, right? If an insurance company is insuring against certain things, it's determined that one of those things exists. So if they're saying this does not exist, this problem does not exist, and it turns out that it does, can't you just call up your insurance company and say, look, I need a boatload of money. You missed something.
You can, but especially in our industry where we're getting a number of referrals at any given time, you're doing title reviews on hundreds of files. We kind of, rather than just call the insurance company on every single one, we have a dedicated department that writes claim letters and tracks the whole claim process. And we have relationships with underwriters with whom we interact with a lot. And the most traditional claims, so whenever we get a file into the firm, we review title. And the presumption is in 95% of those cases that it's a lien of first position, meaning it's a first position mortgage. There may be subordinate mortgages to it, but it is the first position lien. So when you're reviewing title, some of the things you're looking for, unreleased prior mortgages, lack of legal descriptions, tax liens, things like that, that would potentially infringe on the priority of that given mortgage. You want to make sure that the underwriter is put on notice.
So what happens now? You send in your letter. Do you get a check? What does the insurance company do?
So you could, but traditionally the underwriter responds in one of three ways. I'd say there's a letter of indemnity, that's affirmative coverage. There's a denial letter, which typically is an affirmative denial. And then there's a pseudo denial letter, which the underwriters have been more keen to respond with, which is what's called a no loss letter. A no loss letter is a flavor of a denial letter. And what the underwriter is telling the insured at that time is that this may be an issue in the future, but it doesn't give a rise to an issue now. There is no loss yet suffered by the insured. Now, remember, this is an insurance policy. It's supposed to insure against a loss. Very rarely nowadays are underwriters keen to affirmatively issue indemnity ahead of a loss. So if they feel that this is something that may cause an issue in the future, but they're not so keen on affirmatively indemnifying now, they'll issue what's called a no loss letter.
You raise an interesting topic. So they issue back a response and they say there's no loss at this current point in time. Basically, come back to us if there is an actual loss in the future. What if you don't tell them of the loss at that point in time? Do you then have an issue that pops up in the future? Like, it's all, is it really like no loss and thank you for letting me know because you had to?
Almost, but at the same time, a failure to notify the underwriter at a later date could factor into a prejudicial decision down the road. So if, let's say you have a prior mortgage and you write a claim for that prior mortgage in January, 2 years go by and nothing has happened. Then a third goes by and the prior mortgagee has asserted priority and you as the insured have not taken action to notify the underwriter. If enough time has passed and that prior mortgagee has commenced an action to challenge your priority and you don't go back to the underwriter, there may become a point of no return, past which the underwriter is essentially saying, this is a defect that you have created or assumed, and therefore we're excluding and denying coverage. And that's happened as well.
And the assumption is when you say you've assumed the risk or the issue is because you didn't put the insurance company on notice early enough. So in essence, maybe they could have fixed it, but now we took too long to let them know.
The big word is prejudice. You don't want to do anything to prejudice the underwriter's position. So if under that same scenario, you have a prior mortgagee and they assert priority and they challenge priority, you put the underwriter on notice right away so they can go out, tender defense, retain counsel, and help you defend that challenge.
You mentioned prejudice, right? So you mentioned that an insurer could deny coverage on the basis of prejudice. What are some other rationales for denial?
Yeah, so that's sort of a byproduct of an exclusion, the prejudice, but other things that are specifically excluded under a policy for which no coverage will be afforded, defect created or assumed by the insured. That's a big one. Post-policy events. So you have a policy, that policy has a date certain. After that date certain, they're not going to cover things subsequent to that policy. So if you have issues that popped up afterwards that don't speak to an issue earlier in time prior to the policy, it's what's called a post-policy event. Rights, eminent domain, things like that are necessarily excluded from coverage. So these are just some other exclusions for which coverage will not be afforded.
This was very informative. I think it's interesting because when someone thinks about title insurance problems, they almost sound really simple, right? It's like, I have a problem, I call my insurance company. But I think one thing you and I both know is it's much more nuanced, it's much more complex. There are a lot of more ins and outs to how this stuff plays out. So I appreciate you jumping in and giving us a clear picture.
Happy to be here, Adam. Thank you.
Thanks for tuning in to the Weekly Friedman, your source for the most essential information in the default industry. Looking forward to seeing you next time.